Price action is the ultimate decider. It interprets news and judges it. Your opinions are irrelevant. Leave your ego and politics at the door. Whatever you think about Trump and his policies and tariffs and how he's interpreting things, it doesn't matter with regards to trading. Your job is to just interpret the price action of the market indexes, leaders, and do your best to participate on the right side here. So early uptrend, goal during this period is to gain exposure to the top liquid ideas to test the uptrend, and then listen to trade feedback and manage your open risk. And make sure that if things roll over, you're not taking too much of a hit, but if things work, you're increasing your exposure to participate in that uptrend and move your portfolio forward. Each day, you want to kind of build a consistent relative strength list. Just, make a quick list, go through your screens and jot down any names that are standing out in terms of holding up above moving averages, reclaiming moving averages first. On a big red day in the market, when the market's gapping down on bad tariff news, which stocks are staying green or staying positive? Note those type of stocks and look for themes among them. This is Palantir, again, base above the 200 SMA, big oops reversal here, which is basically when we open well below this low right here, the prior day's low, and rally back through it. This is a potential entry point, but often, with extreme volatility, it's just a good sign of strength. And then we rally above the moving averages. We pull back to the 21 EMA. You could have built a position here and range breakout, and then you're on and got a nice cushion going into the base pivot. You could have held through earnings, at least part of your position, and, even added back anything you sold before earnings, at this bar or this bar right here on the fresh breakout. So perfect. And I thought it was really cool. Wes, you had a very similar slide to this. Basically, what this does is I'm plotting it here on the QQQ, the NASDAQ 100 ETF, all the kind of key news headlines surrounding tariffs, because that really is the fundamental macro driving factor that's driving everything right now. During any market period, there's going to be some fundamental factor that's kind of impacting everything. It can be positive, like the development of AI that can drive long-term trends, but often when we enter a corrective phase, there's something negative overarching, happening. Back in 2019, it was actually China trade wars, again. Then during COVID, of course, it was the COVID correction, and COVID was driving things as well as the economic impacts from that, and so on and so on. There's always something going on in the news, whether it's inflation, what the Fed is doing, that drives and has an impact on the market trends. So here, as I mentioned, and let me minimize this here, I've kind of labeled for each of these days when key news events took place. And let me actually zoom in a little bit so it's easier to see here. Hopefully, yeah, that's better.
That's correct.
So obviously, as Wes pointed out, this was the big day where we saw a reinvigoration of the correction because it was Liberation Day. The tariffs were announced right here. We saw, one more leg down, significant extension down here. And then towards the bottom, obviously we were very short-term extended. We were due for some type of counter trend rally. Whether that was going to be the bottom, we didn't know, in real time. But you kind of have some expectation when we get so extended to this that there'll be some type of bounce that will either roll over or, as we saw here, start to form higher highs and higher lows and start a new uptrend. But regardless, here on April 7th, we actually had, of course, significant extension, but then it was kind of interesting. We had a rumor it was funny. I think it actually started on Twitter where there's this news account named something, and then Bloomberg after that, and he posted something about there being a pause about tariffs that was then repeated by different news outlets because his last name was Bloomberg on Twitter, and it caused this kind of algo frenzy, which if you look at the 5-minute charts or 1-minute charts on that day, you can see when that tweet hit and when it got repeated over and over again. And we actually saw what the impact would be of an announcement of a pause of the tariffs and what impact it would have on the markets. We saw a crazy rally here. It did fade, obviously, into the end of the day when that rumor was debunked. I think there was some news out of the White House that was false. But regardless, you got to see what that type of news event could actually have, what kind of impact that news event could have on the markets, which then we saw 2 days later happen for real. So the next day, still very volatile, inside day. And then here on April 9th is when we had that 90-day pause of the tariffs announced. And also, if you look at the intraday charts here, just the incredible rally that took place off those lows, reconfirming, the start of a potential rally. At that point, kind of my mindset is this is a important local low. Who knows if it's going to be the low of, the downtrend, but at that point, that is the significant level to trade against, to think about and measure higher highs and higher lows versus. After that period, there's kind of a week where we just have sort of kind of digested this massive bar where we consolidated within it. We tried to push the 21 EMA on the QQQ here, rejected down. We had some gaps lower, but then here on this day, we gap lower and close off lows and then reconfirm higher the next day. And this is the first follow through day that Wes and Roy mentioned. And here we got our first kind of glimpse of positive news after this one here. And it's amazing how it kind of lines up with the technicals. Here on April 22, Trump and Wes mentioned also what his cabinet member said as well. But here Trump said China tariffs will drop substantially, but it won't be zero. So a positive message. We don't know what the resolution is, but we get the first hint of really positive news regarding the relationship with China, because at this point we had kind of positive news with everybody else, but China was still the dominating factor. And of course, it's probably the most important country with regards to the tariffs, with regards to how much it's integrated into our economy and the world's economy. So that sparked this follow through day here. And we didn't just have one day of strength. We had follow through to the upside, gapping above the 21 EMA. We did close below it, but the next day we saw a reconfirmation to the upside. And then here on April 25th, we get our kind of next batch of good news regarding the China negotiations. I said here who called who, because there's some back and forth about whether China started negotiations or Trump started negotiations. But regardless, it was just kind of positive sign that there was some communication, there was some negotiation back and forth, and that talks were resuming. Then on April 30th, if we move forward, we had a gap down. And gap downs shortly after the start of new uptrend, because how I define it, and we'll talk about market cycles later on, is when we pop above the 21 EMA and stay above it. This kind of started the new technical uptrend for me. Often early on, 4 or 5 days in, we see what we call a stress test, where we see a significant down day. The leaders may be down 3-4% in the morning, and how the market handles that type of stress test kind of tells you a lot about the strength of the market and the strength of the market leaders as well. And we definitely passed the stress test, closing right near highs. All the stocks that were acting well, CrowdStrike, Palantir, they rallied and closed near highs on that day and just acted well. So after that negative news event, GDP contraction, weak jobs number, all related to tariff uncertainty, we closed strong, showing that the market was kind of brushing that off. And that's definitely a positive sign when the market ignores negative news related to the dominant fundamental factor. After that bar, we got some nice follow through up towards the 200 SMA on the QQQ, and didn't really have too much news until May 7th when the Fed maintained interest rates, citing economic concerns. Again, kind of a negative news event, but the market closed well. We saw fall through to the upside, and then tightness right below the 200 SMA. And then the weekend hit, and we had the first batch of really significant resolution news about China-US de-escalation agreement over the weekend, which was implemented over the past few days. And that's been the most recent development so far, causing this really strong gap up above the 200 SMA and significant fall through here. So you can kind of see how the negative news gets announced, and then we kind of brush it off. And even before the news is completely resolved and completely fixed, the market has looked forward and seen that there's light at the end of the end of the tunnel, and started to form higher highs and higher low here, higher low here, higher low here, higher low here, and so on, reclaiming the moving averages as we go. So that's kind of a fundamental view, noting some key dates and events here that I think is always cool to look back, because every correction is similar. If you go back and do this exercise with the COVID correction, you'll see how, very similarly, before there's resolution about economies, reopening, states reopening, we had already bottomed and we're well underway, and the market looks forward. And that's one of the key things I want to pass on to you guys in this presentation. And this tweet that I put out actually on this day right here, which was funny enough, the day before we got that kind of reconfirmation positive news that really started this move higher. This tweet here kind of sums up how I kind of interpret things. And I'll just read it because I think it's a good review here. I view the markets through the lens that price action reveals all. Currently, we are in a longer term and shorter term downtrend below the 200 SMA and 21 EMA. I do consider the current dominant story that defines the risk environment. Right now, it's tariffs and trade deals. I'm no expert at these topics. However, the market looks forward and will show when it sees hints of light at the end of the tunnel. When it does, we will reclaim moving averages, form higher lows, price action will tighten, and individual leaders will set up and stand out likely before all the news is resolved and looks sunny. And then kind of the next day, that actually played out pretty well as we got reconfirmation of positive news. We reclaimed the 21 EMA, started forming more higher lows, respecting that 21 EMA to the downside, brushing off negative news as the market's looking forward, reclaiming more moving averages, the 50, the 200 SMA, and continuing higher and starting a new uptrend. So this is kind of how I interpret all market corrections. There's always something going on, but you always want to kind of put your opinions aside and just look at what the price action is telling you, and especially what the market leadership is telling you, and just listen to price and your rules, and that will help you escape the worst of corrections and participate during the best of uptrends. And then here on this slide, let me get a quick sip of water here. Instead of a fundamental view, I transitioned more towards the technical things that I was looking at, and I'll zoom in again here so it's a little bit easier for you guys to see. There we go. So obviously we had the first leg down here, and you could call this the first leg or almost the second leg because we had so much chop back in this area that was almost kind of a correction in disguise here with deep seat gap down, all of that. So whatever you want to call it, this could be the first leg or second leg. But regardless, we had an initial move lower, break below the 21 EMA. This, just like Roy and Wes, I'm interpreting the same way. This was when to get out of the markets. You're probably getting stopped out on race stops as stuff is breaking the 21 EMA. I remember I was getting stopped out of Palantir, Reddit, those leaders of that previous uptrend. And we have a significant downtrend breaking below the 200 SMA, volatility's super high, gap ups, gap downs, but overall we're moving lower. Then we had this consolidation, this range form. This becomes the local key low to measure if we're having a valid rally or not. And we did try to move out of here, but we were rejected as we tried to break above the 21 EMA, then 200 SMA, and were rejected down, and again formed a lower high here, and then the tariff gap news hit here, and we started that downtrend. But this is kind of how I interpret price action, and it's kind of a part of a playbook that I view all downtrends and transitions from a downtrend to a correction. And we'll talk about the base trading playbook later on in the presentation. But here we have extension to the downside that then closes up. That's the first positive sign you're looking for. This becomes the key low that you're considering. Then we have an inside day that holds above this low. Again, this low is key. Then we get reconfirmation up. It is a powerful day, and important enough, this inside day closed pretty close to lows, but instead of falling through to the downside, which is where the momentum was, we rallied incredibly strongly. So that was a sign for the bulls here, definitely a positive sign that a rally could really be taking hold here. Then we just consolidated within this massive bar below the 21 EMA. Often the first and even second rally into the 21 EMA, the declining 21 EMA, will fail, and it will set up the next higher low, which is exactly what happened. We had some tightening action, then a gap lower, another gap lower, but then we started following through to the upside and testing that 21 EMA one more time. And this time we were able to close above it, really get going, and had reconfirmation up. We had this day where, again, we hold the 21 EMA and have a strong close after the gap down, another positive sign. Then we rally, test the 200 SMA, pull back, tighten, form another higher low. We have a strong close here after the Fed news here. We fall through to the upside, carrying on that momentum, consolidate near the 200 SMA, and then we get a gap up and continuation up. So you can kind of see how you can look at it both from a fundamental news-driven lens, but also a technical lens. And regardless of what the dominant news factor is, the technical lens will always look pretty similar at these market bottoms if you studied enough of them. There's always extension down that gets bought up, no further price progress to the downside, higher lows form, reclaims and moving averages, there's less gaps, there's more tightness in price action, and that playbook just kind of plays out again and again. And then this is a chart that I made actually for that market cycles presentation for the handbook, and it was kind of interesting. We did that webinar 2 days after the market cycle turned on, and a lot of the stuff that we talked about a stress test, and that happened the very next day. And lucky enough, we heard from a bunch of viewers of that webinar that actually helped them immensely. They helped them stick with the positions they had during that stress test and actually buy more on that weakness. But the market cycle began here, and then what this chart is showing is basically key price and volume action moves from leadership quality stocks that goes along with this trend. and market leaders will always kind of form up and maybe make a higher low as the market forms one more lower low. And just in general, as the market forms up, you're going to see leaders kind of do the same thing, but be a little bit stronger and lead the market higher. They'll reclaim the moving averages first. They won't progress as much to the downside during that last leg lower. And basically here, again, with each day, I've noted the key price and volume moves from stocks like PLTR broke above its 21 EMA here. It had another 21 EMA. It actually had a 21 EMA pullback here on April 21 that it reconfirmed to the upside. MSTR had a gap and go on this day. Netflix had a gap and go on this day. That was a stock that was standing out. TEM had a range breakout on this day. Numerous gap ups. So you can kind of see how the market leaders are acting along with what the market's doing. Here you had GEV range breakout, Tesla breakout here, Okta 50 SMA pop. So you can kind of look and see, and there's a great exercise. I highly recommend it. Basically, look at a market index along with key leaders and note when their setups really developed and really matured, and where you could have entered after the market kind of really got underway and reclaimed that 21 EMA. And then this is actually a screenshot. It's basically the information from 2 tweets that I made on April 22, April 22, which is the day of that first fall through day. And these are basically what Hood and Palantir looked like on that day. You had Hood popping through the 21 EMA, forming a clear higher low here. You had a negative close on this day, and let me zoom in so you can actually see. Hopefully that's better. You had a negative close on this day, and then on that April 22 day, you had a positive bar here breaking through the 21 EMA. Nice close. You can see how this chart looks just so much stronger than the QQQ on that same day. And from here, it was off to the races and acting tremendously well. And then here is Palantir on that same day. Look at how it rallied off the highs. Its base, this entire base is above the 200 SMA. You can see it peaking here while the market was well below it. And that's one key sign of relative strength that you want to look out for. But again, this is when the market bottomed. It had a strong undercut and rally, reconfirmed to the upside, popped to 21 EMA, and it was holding above that as the market was still, trying to push through. And on April 22, it's forming this nice range and a nice inside day here that actually pushed higher very shortly after this. And obviously, Palantir up about 40% from this point. We have an earnings gap down, but then made new highs today here as we're giving this presentation. So this is kind of what you want to see leaders look like as the market is really putting in that first higher low. Is they're more advanced than the market and basically setting up that first EMA cross back into the 21 EMA and then reconfirming off of that. All right, so here are some key points that I want to kind of distill about interpreting the market based on the fundamental factor, what the leadership is doing, all of this. So hopefully this helps sum it up here. Price action is the ultimate decider. It interprets news and judges it. Your opinions are irrelevant. Leave your ego and politics at the door. Whatever you think about Trump and his policies and tariffs and how he's interpreting things, it doesn't matter with regards to trading. Your job is to just interpret the price action of the market indexes, leaders, and do your best to participate on the right side here. And then here, know what the key fundamental driver is that the market cares about. And note how price reacts in relation to related news catalysts. So, CPI inflation, that was huge for quite some time during the bear market. And then finally, we saw some instances where the market brushed everything off and responded positively to negative news catalysts to what the Fed was saying. So that's always what you want to be looking out for is when you know what the dominant factor is, whether it's trade wars, whether it's general war, whether it's a pandemic, whether it's CPI inflation, key news events, jobs reports. Note when price reacts much differently than you'd expect it to and starts ignoring negative news events related to that dominant factor. And then this is really key and related to that. The market looks ahead. The leaders and indexes will bottom and start trends as the light is first seen at the end of the tunnel, not when we're really approaching it and it's really clear, just when the first few signs of positive news and developments, that's when things will start shaping up. And that's when we want to start getting involved to participate at that lower risk zone when breadth is expanding, everything's spreading, we're getting those Zweig breadth thrusts, all of that. That's when we want to start putting on positions or be adding exposure as we go and get positive confirmation and trade confirmation. Then to really sum it up, this is something that Ross, who is a co-founder of TraderLion, former portfolio manager for O'Neill, he really sums everything up with watch the leaders. If you're paying attention and watching for relative strength throughout the correction, you notice Palantir pretty early, CrowdStrike pretty early, and as they bottomed and started showing respect for the 21 EMA and forming higher lows and reclaiming moving averages, that was the sign that, hey, the market's going to shape up here. We're shaking off what the news is. And you can gain so much information from just watching the leaders, both to the upside as we're beginning uptrends, also to the downside as we're breaking down. And we'll actually show a slide of that in just a minute. And then the last point is, and we'll talk about this in the second half of the presentation, you need to establish a market cycle system and rules that define how you analyze the market and, position early in an uptrend to, get close to, getting positioned early in that uptrend to participate. And then also to when things are breaking down, how do you protect yourself, lock in profits, all of that. You need rules to define that market cycle system so you can do that repeatedly, hopefully just like Roy has over 35 plus years in the market. These rules are going to apply over and over again. We're going to see the same show where market leaders break out at the beginning of an uptrend, and then eventually we top and things roll over and all of that. And you need to come up with rules that encapsulate the key moments there and tell you how to act, how to sell into strength or how to sell into weakness, how to buy, early in an uptrend. All of that should be kind of decided based on those market cycle rules. And this is kind of a good encapsulating point here. Here at the top, we have Reddit, which was one of the key leaders during that strong uptrend into the end of last year and even into the beginning of this year. We've got Palantir here as well, another one of the key leaders here. And then we have the QQQ. So here was the chop phase here. The Fed changes tune on this day, but Palantir and Reddit still had a little bit of juice in it. They were probably the strongest stocks. Nvidia and MSTR, which were the best leaders before that, had already kind of topped and done their last exhaustive runs. And these were kind of the two key names left standing. And what did they do before the market broke down below their 21 EMA? Well, we had a breakdown below the 21 EMA here on Reddit and starting to live below it. And Palantir, a few days before the market really broke down, it was short-term extended. And then in one day, I think it dropped 8, maybe 10%, or I'm not quite sure, but it broke several lows at once and really changed the short-term trend of that. And these are subtle signs that you want to be watching for. When the key leaders start breaking below moving averages or breaking a lot of lows at once and just changing character in general, that might be a tell to say, hey, become a little bit more defensive because a correction could be coming soon. We never know how bad it's going to be, but it can give you a heads up and just let you be in a more defensive mindset and protect your capital that much more, when we begin a new downtrend. And then Palantir as well, you can see how it shapes up versus the QQQ. You can see how this low relative to where the QQQ's low is much tighter and closer to its previous low. Again, just showing relative strength. And this happened, I don't have it on this chart, but above the 200 SMA. And this broke well below its 200 SMA. And just obviously this is a little bit of an older slide, but this was still below this 200 SMA as the Palantir was already above its 21 EMA and 50 SMA and rocking and rolling. So that's a good slide to kind of, encapsulate why it's important to watch the leaders, both to the downside as early sell signals and warning signs, as well as to the upside when a new uptrend is beginning. All right. So early uptrend, this is just a quick review of, what to think about early in an uptrend as we're forming higher lows, reclaiming moving averages, and leadership shapes up. The goal during this period is to gain exposure to the top liquid ideas to test the uptrend, and then listen to trade feedback and manage your open risk. And make sure that if things roll over, you're not taking too much of a hit. But if things work, you're increasing your exposure, as Wes and Roy showed how they were to participate in that uptrend and move your portfolio forward. Early in the cycle, there'll be a lot of noise, uncertainty. This is why we need a system to define our actions and then just simply let the market show us what to do. One of my favorite quotes from Nicholas Darvis is basically he puts on a trade and then he says, and then I let the market decide what happened next. Either you get stopped out or you don't. And that's valuable feedback that can then tell you to be more aggressive or defensive. Gap ups, breakouts will be doubted early in an uptrend. Trust your system and your risk management process. Gap ups are almost more powerful during new uptrends because nobody trusts them, versus later in uptrend, the third gap up is more likely to be sold into. and be an exhaustive gap versus one that you'd want to really position and be able to ride for that entire kind of earnings cycle, the trend between earnings reports. This is just a quick note on some things to be doing during a correction to really be ready and identify, again, the Palantirs, CrowdStrikes, MSTRs early on, so you know which ones to position. Basically, each day you want to kind of build a consistent relative strength list. Just, make a quick list, go through your screens, and jot down any names that are standing out in terms of holding up above moving averages, reclaiming moving averages first. On a big red day in the market, when the market's gapping down on bad tariff news, which stocks are staying green or staying positive. Note those type of stocks and look for themes among them. And here are some quick things to look out for. Look for stocks and themes that are holding well when the market is down big, holding above moving averages, forming higher lows as the market forms lower ones, consolidating sideways as the market really trends down or makes another leg down. They're bouncing the strongest after the market puts in a key local low, reclaiming key levels first, breaking out first through levels, highs, all-time highs, and also entering RS phases. And RS phases is just when the relative strength line is above its 21 EMA. So we'll show that in a chart in just a minute on some of these leaders. But these are some things to look out for to identify what the leaders are going to be. And if you were looking for these things, you identified Palantir, Hood, Uber. These are the key names that have done tremendously well early in this uptrend. We'll see how things go from here, but this is how you spot them early on, so you can buy them on that first higher low or first pullback to the 21 EMA, or the first breakout, pop above the 21 EMA, or the first range pivot breakout. This is how you spot them early, so you're ready to act when that setup occurs. Here is a quote that just kind of shared my RS list and the names I was watching during this period in the market, where again, we've put in a bottom, we've had this tremendous bar, and now we're consolidating. We see a lot of names that have done really well: Lore, Hood, CRWV, Cyber. That theme has been doing well. CrowdStrike, Palantir, Gev, RBRK. So Titan, GRPN. How did I find these names magically early on? Well, I was just trying to kind of pay attention every day and see what was holding up the best, what was holding above moving averages, what was bouncing the strongest over the past 5 days and 5 days, because that's when the local low happened. And I kind of run a screen in deep view. We've got data points that look for performance over the past X days. And right after a market correction, there's a golden nugget for you guys that write this down. If we're 5 days past the local low, run a screen or sort your screen by percent change from over the past 5 days, and that will show you the stocks that are bouncing the strongest since that market low. And some of them are going to be destroyed, they're well below moving averages. You want to kind of ignore those or just keep an eye on them. But the ones that are holding up well, forming more mature bases, reclaiming moving averages, those are the ones you want to have on your radar. And a lot of these fit that bill. And actually my focus list from these were these three: Palantir, Crowd, and Hood. So that just kind of show you the value in doing an RS list every single day, doing your homework, because it's going to set you ahead. And when the rally, if it does materialize into something real, which this one has so far, you'll be well ahead of the curve, be hopefully positioned in the leaders, 3, 4, even 5 of the leaders, and benefit from the natural breadth expansion that we see early in uptrend. So that's a quick thing on RS lists and kind of showing what mine was during this period in the market. And then a big reminder that I want to emphasize here is, we're still so new in this. So, this, like Wes pointed out, we're maybe a week, 2 weeks, 2 weeks and a half from when we just reclaimed the 21 EMA. We just reclaimed the 200 SMA. And there's going to be time, even if you're not positioned here, the leaders that made their moves are going to set up the next buy points. They're going to pull back into the moving averages, pull back to pivots. And naturally, in the first few weeks, 4 weeks or so of a rally, there's breakouts. And this is a similar graphic that I made back last year, analyzing that correction, the names and how they broke out from there. And you can see that even a bunch of weeks later after this market bottom, sorry, I'm trying to zoom in a lot here, there were names that were breaking out. GPS, ARM broke out here, Path, GTLB, Affirm. So again, the point here is that even several weeks after the market reclaims the 21 EMA and reclaims the 200 SMA, there's going to be opportunities. So if you feel like you've missed this uptrend, where maybe in the first or early second inning of this uptrend, if this really materializes into something great, so don't feel pressured. Find those low risk buy points and just be patient, and the time will come to be aggressive. And right now we're kind of almost in this phase where we're potentially short-term extended, and maybe the rally is still just getting started. But here, what do we have here? We've got a week-long consolidation that set up new buy points, new pivots, and that'd be kind of what to look for if you don't have too much exposure already here. All right, so getting into this a little bit, and like how to trade a PLTR or hood if you spot it early. Trading a base playbook, these are just kind of the things that I look for. Watch for an extension down or gradual bottoming / tightness action at the lows of bases. Look for a sign of power off the lows, strong bounces off the lows. Look for the formation of the first higher low. As the base matures for entries, look for tight areas, moving average reclaims, constructive pullbacks, or other entry tactics as the stock is generally moving up the right-hand side of its base. This could be, again, a pop through the 21 EMA, a pullback into that 21 EMA as it forms a higher low, and then a reconfirmation up through an early buy point, a cheat area, something similar to that. But what's important is, these entries should allow risk to be managed. I like to do under, 4, even under 3% risk using oops reversals and other entry tactics, but you want to keep risk very tight here. So if the market rolls over, you're protected and you're not losing too much of your portfolio. And then I like to look for full positions before the standard base breakout through the pivot. Palantir just had it today, but there were opportunities where you could already be at a 30-40% cushion if you bought early in the base while managing risk very tight. But yeah, as I was saying, when a stock approaches the actual base pivot, often it's in the eyes of everybody in the market. And I'm always trying to, establish at least a starter position, beginner position before then. So I've got a cushion going into that volatility that often happens near that base pivot. All right, and this is just an example with, this is a great example of app back in the fall. We have that extension down, power off lows, the higher low here, reclaiming the 21 EMA, and then it sets up a nice tight range entry here. So even if it broke out here, you think it missed it, it experienced that volatility near that base pivot, pulled back into that 21 EMA, and set up a really nice pivot here. And we all know what happened. It doubled or even more from this point. So be patient, look for the lower spots. Everybody who missed this day right here and we're in position feels like they missed the stock, but you just have to be patient and wait for the next buy point, because often, the best leaders, if they're going to double and triple or even more so, there's going to be plenty of other low risk opportunities, pullbacks to moving averages, fresh breakouts where you can jump on to that trend. All right. And I'll go through these pretty quickly, but I'll probably send the slides to Roy, or you can email me at richard@TraderLion.com and I'll send you the slides. But this is just kind of doing a few case studies of some of the different key leaders. This is Palantir, again, base above the 200 SMA, big oops reversal here, which is basically when we open well below this low right here, the prior day's low, and rally back through it. This is a potential entry point, but often, with extreme volatility, it's just a good sign of strength. And then we rally above the moving averages. We pull back to the 21 EMA. You could build a position here and range breakout, and then you're on and got a nice cushion going into the base pivot. You could have held through earnings, at least part of your position, and even added back anything you sold before earnings, at this bar or this bar right here on the fresh breakout. So this is just a quick annotation of Palantir. And again, if you want to look at this more on your own time, feel free to do so. Here's Hood, same type of playbook. Again, reversal, extension off lows, reclaiming the moving average, tightening up the moving average. This is kind of your first potential opportunity. Rallies again, sets another opportunity against the 21 EMA below this pivot. And then we get reconfirmation, then we get this recent extension. And, I saw a question from Arnold, I think, talking about, the future, where would future spots be? Well, if you look to the left, you can see potential resistance up here. We're approaching that. We're short-term extended into that level. So the next opportunity might be a handle that sets in here against the increasing 21 EMA. That would be a spot to look at both in the stock, in Hood, as well as in the market at large. Right now at this point, we're a little bit short-term extended. We've come a long way over the past 5 days, but that doesn't mean we have to pause. Again, the market's going to do what the market's going to do, and early in an uptrend, we can seem overbought for a lot longer than, we call those lockout rallies, right? So you might have to be creative and find an oops reversal or a spot against a 10 EMA to position. But that's why it's important to do your homework early, have the RS list early, so you can be trying to pick up Hood at this spot, or against the 21 EMA or on the reconfirmation or the gap and go. So these earlier buy points, that's what you want to be focused. But if you're not already in, we're still below the base pivot breakout. So technically we're still early. So if it pauses, sets back up, that would be a spot to look for. Then we've got HIMS. This is a much more of a faster mover. I wouldn't necessarily call this a true market leader quality. It's a little bit more of a momentum type name versus a market leader, but it's in play. It's got a theme, which is the weight loss, diabetes movement. It had the Catalyst partnership with NVO to offer their drug through the platform. It had a gap up, a really tight day. And this is a subtle thing that I look for, really tight setup days, because they can set up a good pivot through the highs. And then it broke through and it's been on fire since. On the earnings, where it reported earnings, this was the first opportunity buying here. And then the second opportunity was on the oops reversal after it gapped down on earnings and immediately rallied through. And I did a write-up for TradeLab on actually both this setup and this setup, if people want a little bit more information. And then right now, again, it's such a powerful trend, but short-term extended, it's kind of in no man's land where, for our style, the number one thing is, can we manage risk? Is this a tight and logical entry from a setup that we expect can see an immediate move? And right now it's already making an immediate move. So you have to wait for that next contraction, the next pullback, the next key resistance line that might break through. So that's HIMS, another really powerful opportunity during this uptrend as it stands. Here's MSTR. I know you guys have been trading IBIT, Roy and Wes. This is the stock name to trade when it comes to crypto related. It had that same thing, reversal down, but I think this is a really key thing to point out in terms of looking for relative strength. We've got a move lower here, but we don't actually break these previous lows. And as dramatic as this pullback was, we weren't able to really break much below the 200 SMA, and we immediately rallied back up and again held above these highs right here. So a sign of relative strength that really claims the 21 EMA well below before the market, forms a tight area here, breaks out, sets up really nice and tight on top of this pivot, and has just been really trending and re-breaking out above the 10 EMA ever since. So not much to do here if you own it. Just trending above the 10 EMA, trim and trail, and watch for a definitive break below those moving averages. And, IBIT, Bitcoin might be just getting started again, just moving up the right-hand side of a base. So we'll see if this can have a really nice trend like we saw in the latter half of last year. Here's Tesla. Again, this is another sign of relative strength, even though it was pulling back, and this is in more of a significant decline than the other names we talked about. Most of these were forming their bases around the 200 SMA, but Tesla is the type of name where when it's in play, it can make a dramatic move. We saw that in 2020. We saw that a little bit to the end of last year, and we have had a significant decline. But again, this last pullback in the market, we weren't really able to make any more downward progress. There's some accumulation going on by the largest funds where they're saying, all right, we're comfortable accumulating Tesla within these prices, and they're absorbing any supply that's coming to market. And after such a significant decline, we're looking for the type of bottoming type action, bottoming base, higher lows to form. We get a first higher low here, we push higher into the resistance level, and really this was actionable. And the best buy point was last week. You can see how we pulled back into the 21 EMA. These two very tight days. And I talked about this in real time in the TradeLab. Again, this isn't hindsight. You've got to pivot through these highs, breaks higher. You've got another buy point popping through the 200 SMA, and now it's kind of out in the woods here. We're a little bit short-term extended. Strong reconfirmation today, just breaking out of this bottoming base. And basically, you'd be watching for the next higher low against the rising moving averages if you're not already in this name. But again, this is so early because this is just moving off the bottom here. If it's actually going to make a meaningful trend, it's still well below all-time highs. So there's time with Tesla if it's going to set up and keep moving. Here's Uber, just the day before and today made really nice moves. Again, we've got that reversal extension, oops reversal off lows, reclaim of the 21 EMA. These are just kind of things to mentally check off. Higher lows, retesting the moving average from the top side and holding. That's a key thing to look for. Tight ranges, and then it moves higher and then forms a nice tight range on top of the base pivot that really was set up from the base that's about 15 months long. So from big bases come big moves, and this is exactly what we're looking for. And we formed a nice tight range here, top side pivot through these two bars here, pulled in, and then rallied and really strong close on Friday. That was the time to enter right here, or even against the base pivot, managing risk a little bit lower. And then you've got a nice fall through. This is what you want to see on a base breakout. Just keeps going, and we see successive buying the next day, even the day after that, getting you at a profit right away. So that's another good case study here with Uber. So again, here's the Trading Base Playbook. These are things to look for as the market is bottoming, as stocks are bottoming. First, look for an extension down or gradual bottoming tightness action. Look for signs of power off the lows, relative strength holding above the moving averages, strong bounces. Then look for the formation of the first higher low. And then as the base matures, look for entries from tight areas, moving average reclaims, constructive pullbacks into those moving averages, or other entry tactics as the stock is generally moving up. And we want those entries to be tight and logical, allowing you to manage risk under 4%. And then ideally look to have a full position before the standard base breakout, or maybe accumulate 2/3 and add that last third or fourth on the actual base breakout when it confirms that it's actually starting to move. And then simply manage the position versus uptrending moving averages. Keep it simple. That's what we want to do until it actually starts breaking down. Try to keep that trend going and participate.